Okay guys, in this video today, I'm going to be showing you using the 12 range chart, which is more so my anchor or my entry chart that I use most time. That uh, when I post like screenshots on Discord or am live trading and you see me, primarily focusing in on my 12 range chart most times. Even though the strategy that I showed from the beginning using paired charts, I highly recommend to beginner traders, those that are just starting off, those that are trying to get a footing into the trading world and trying to find a solid strategy that actually works. In that last video I made showing you the paired chart approach strategy that I started using years ago that allowed me to basically open the door for me to be able to become profitable in trading each and every day. So, and primarily since then, I've kind of, I still use it most times, that paired chart approach, when the market is kind of ranging sometimes, or, if I'm not quite sure when price retraces back or pulls back to a supply or demand zone, I'll look to see if I want more confirmation. But I can also trade straight from my 12 range chart, and at times when we're not even in, or when I'm not in confluence with the higher time frame, which is my 60 range chart. Now I know a lot of you guys may be possibly trade time-based charts, maybe like a 60-minute, you're following the hour chart, and maybe your entry chart's a 5-minute chart. Regardless. And maybe most of you guys, like I said, you take your trades from a 5-minute chart. Well, for me, the 12 range chart is what I like to trade from. And lots of people always ask, why do you use range charts? Because the fact it's just clean into the eye. There's no specific reason why I use range charts. To me, I just like the price movement. You don't see large wicks on at the end of candles, whatever the case is. It's just cleaner to the eye to me to be able to follow price action. No specific reason other than that. But whatever works for you, I always say stick with it. Don't deviate or shift or move on to a different strategy unless it's not working for you, okay? If you're consistent and you're profitable, stick with what you know, all right? But let's go ahead. We're going to jump into today's video because I want to talk about the 12 range chart, how I use it each and every day in my trading, specifically honing in on being able to trade from one chart, okay? And even if price is not in confluence with the higher time frame, but if it is, I will say, if you are in confluence or in are moving or taking your trades from this in the same direction in which price is actually moving, it does add a additional layer of confirmation. Definitely so, because you're moving with the higher time frame. But you can also trade, and I said this before in a previous video, trade outside of having confluence with the higher time frame, even though I will say this, the move may not be as great, in a sense. I'm a scalper. I'm looking for short entries in and out the market, looking for the next setup. So I'm looking for multiple setups versus someone that may be looking for a one trade type thing and be done, whatever the case is. Nothing wrong with that. But I typically like to take a couple trades and then I'm done for the day, whatever the case is. But I'm a scalper. I know where I need to get in, where I need to get out. If price comes back against me for whatever reason, I'm getting out before it even comes back against me to where I start taking major drawdown. So without further ado, watch the intro. We'll jump into today's video and we'll cover that topic real quick. So if you're someone new watching the video today, I'm a supply and demand style trader. That's what I trade. I don't trade, breaks of support and resistance areas for pullbacks to support resistance. I like to see price pull back into the swing, whatever case is, where the move started at, where the move originated at, especially when we have a gap, meaning that when price moves away from and creating a supply demand area. So we got a nice gap, quick movement away with lots of either green candles or red candles. It just shows me aggressive buying or selling in a particular area. So I hone in and I'm looking for those areas to where price has made a quick move or decent move without retracing back fully to that area immediately, okay? So we'll take a couple looks at a couple entries that I took. This is from December the 7th, and the reason why I chose December the 7th is because the market was kind of moving sideways in just this little area right here. And people always ask me, how do you go about trading when the market is actually ranging? There are opportunities. But I'm going to say this: you have to pay close attention to price action. Understand market structure, understand what the market's trying to accomplish, but pay close attention to market structure. To price action. When price is, first of all, once it's broken structure, or because you guys that have been following the channel, people that have been following the channel. When I say guys, I don't mean just in one particular gender of individual. I mean everyone, inclusive, male and female. What I'm trying to say is that I have to look for a breaker structure. That's my first step. And then I want to see, a demand or supply area being created off that breaker structure. And I would definitely love to see price making or creating a gap, waiting for price to pull back and fill that area in, because it tells me that orders were put on, orders were placed. Those moves like that were created by the bigger players of B, which are the banks and institutions, and the market kind of moved away from that area. Orders were filled. Probably not all orders were filled, so when price gets back or retraces to those areas, you can look for a rejection possibly again to take place there, especially if you got a gap, okay? So here's a couple of entries. I think it's about 3 or 4 trades I took here, solely off of the 12 range chart. I'm going to show you how I do it each and every day, okay? So basically, I'm just looking at price action. I'm looking at market structure, okay? I'm following price action as well. When I come into a day, say like December the 7th, and I see when the market's just dumping, making lower lows and lower highs, yeah, my bias probably would be to the downside, right? Looking for pullbacks. But that does not mean that you cannot counter trade or counter trade. Definitely when you see great setups. So price made this low here, pull back, a lower high, and a lower low, right? And I think I actually covered this day before, possibly in another video. But I wanted to talk about this in reference to using the trading from them strictly from the 12 range chart and what I'm looking at. When price made this big swing to the downside, it turned around and made a major low here, okay? At this low here, there's going to be, there's liquidity here. There's a low here. As price breaks up and breaks structure, there's liquidity down here at the bottom, okay? At some point, price is going to come back to this area here. I wish I could draw like a dollar sign here. I'm not sure how to do it on the NinjaTrader, but price will come back eventually to take this area out, because the market makers want to go back and retrace their steps in the market and flush areas where there's money resting in the market. Every area they know where traders either went long or short, okay? So when money was interjected into the market here, or placed into the market, and traders went long here, guess what? Money was left right there, okay? And they want to stop traders out right there and collect that money. So when price broke structure right to the upside, okay, my first thing I said, okay, price broke structure to the upside. Remember what I said in many videos, once price breaks structure, what happens, guys? What you see is you're going to see areas of demand being created, especially when you got nice areas. So each one of these little areas, these little swings here to the upside, as price is making higher highs and higher lows. These are areas of demand, areas where there was buying that took place, okay, with the intention to break higher and take out this area of structure here. But if you look at this, say for instance, I'm going to show you, area where price broke the structure here, it eventually turns back around, dumps back lower, making lower lows and lower highs. What does it do here? It takes out structure right here to the downside, okay? As it did take out structure right here to the upside. Now I wasn't trading at this time. I typically don't start trading until a little bit, about 20 to 25 minutes after the market opens. So I didn't start trading and looking at the market until really after 10 o'clock this day. But when I saw structure being broken to the downside right here, and then it turned back around and started breaking structure back to the upside, taking out this area of structure right here, this high right here, off this swing to the downside, okay? There was demand right here, okay? There was aggressive area of buying in this area right here. So what I did was, first it was actually, I took a trade before this entry here, the short entry right here. I'll show you this right quick. Was right here. This is the short entry, because when price turned back around here, okay, it started making swings to the downside, making lower lows and lower highs, okay? Breaking through this area of structure. When price pulled back to this area here, as it moved to, turning back around, and you got to follow price action. Price action is what I'm trying to say, is that when it turned back around here, it broke structure here. It was basically retracing back to a key area of supply. So again, when price started moving to the downside right here, making lower lows and lower highs, again, break a structure right here, as I said in the last video, okay? Once you got a break a structure, you go ahead and mark a key area of demand here off the 12 range chart, which is right here. I'm marking this area here, for one, because we have a gap right here that was not immediately filled. When price broke lower here, it didn't immediately pull back to this area right here, as well as there's an area of supply sitting right here. So once price made its final low here, okay, well, let's move to the downside. Let's run to the downside, breaking structure here. It turns back around, breaks structure to the upside, basically retracing back. When it pulled back to this key area of supply right here where there was a gap and it filled in that gap right there, I knew possibly that price would reject this area. What I waited for was price to reject the area, okay? And typically what I do is I want to see what? A break of a candle. We got the structure break. We got a supply zone being created. We got a gap right here that price has got to fill. When price pulls back to that area, what I'm basically looking for is a red candle moving to the downside, breaking through the body of a green candle to the downside. Once I get that, typically I'm short, but I gotta be mindful here because we got this little swing to the upside right here. Push up, pull back, push up. Okay, following price action there. So, in looking at that, what I really need to see happen is price to break below. I want to see price break below this 43.25 area primarily. Once it does that, breaks below there, starts to break below. I went ahead and got in short there, and I'm taking my trade. Let's see here. Right here where I have this green arrow at, I had already had it marked right here. Okay, back down to this key area of support sitting right here. All right, so that's why I took my trade, take your trade 2 right there. Again, break a structure, supply being created right here. Break a structure, supply being created. Gap, wait for price to pull back to it. Take a shot going short. Once price breaks back through this area, which was once resistance. Now it's which was once resistance, now which was support. Once price breaks back below this, take a short entry there. And the reason why, like I said, because price broke back into this small swing here with this push to the upside, making this swing here. I got to see price break back below that area there at 43.25. And once it does that, I'm going short, taking it back down to at least this area here. If you got multiple contracts on, I mean, this is a first area where price is going to attempt. There's liquidity resting in the back end of the swing here, but you got to be mindful because you do have support sitting right here. So you can take your first 1 or 2 contracts here out, and then the aim is really going to be looking for price to come down here and test this area of demand. So basically taking your trade from supply back down to this area of demand. I went ahead and got out because I knew right below me was another setup that I was waiting for, which would be demand. So I waited for price basically. So that was the first trade. Going short. Price pull back now. We had a demand zone being created. Why? Break a structure right here, like I said. Price pushes up. Area of demand resting right here. What do you also see? A gap there. All right. Quick movement away from the area. Green candle there. Aggressive buying. Creating the area of demand. And there's a gap right there. Wait for price to come back to it. Once price gets back to that area, I went long from that area there. And my entry was down here at the bottom. Once price, at this point here, I'm waiting for price to break above a candle here. Once I get a break above this red candle right here, I can go ahead and go long. And I'm looking at that point there to take this trade back to this green arrow you see right here, which was an area of support sitting right there at 37. So again, short entry, long entry. You take it short from supply back to demand, and take your trade back up to not support, resistance, guys. Taking my trade back up to the resistance right here above us at this green arrow. If I said support, I meant resistance. Sorry about that. So again, all you're doing, even on your one chart using the 12 range for me, it could be a 5-minute chart for you. Just again, as I said in the last video, look for your structure break, look for a gap or supply demand area to be created. Look for the gap and wait for price to pull back to that gap and see if you're going to get the rejection. There was a rejection right here when price pulled back to this area right here at its key area of demand where there was a gap. Price filled that gap. You may be asking, well, what do you mean by gap? I'll show you to you right quick. If I can get off of this drawing tool here. The gap was from the bottom portion of this area right here up to this area right here. As price moved away, it did not come back to it until price pushed up higher and then eventually filled this gap on the move to the downside. So we got demand, gap, price taps into demand. At that point there, I know that price more likely is going to reject this area and I can look for a entry to go long. And I did. Okay, so that was the trade there for number 2 pretty much. But I'm not really trying to go into detail about the trade so much. I just really want you to understand on a your entry chart, whatever it may be, I would recommend not using a too low of a time frame chart because you're going to get a lot of chop if you're trying to trade this way off of one chart. I would recommend if you're like using a time-based chart, maybe using a 5-minute chart. For me, because I use range charts, I could 12 range chart, maybe even a I don't know 16, 20 range chart. It just depends on your style of trading. You could even probably do it on a 24 range chart. But for me, I can see multiple setups like this if I'm using like a 12 range chart, and I've been comfortable using 12 range charts since day one. So, anyways, but again, I just want to show you again, you're just using the same tactic, same strategy at hand, and that is looking for a breaker structure. All right, you're looking for a supply demand area to be created and a gap to be created once price moves away from that area and it does not immediately return back to it. All right, so for instance here, like let's say price broke this area here. I'll just give you an example quickly. Okay, right here, it came made this low here. It broke this area structure. Okay, so let's say it moved to the upside and then came right back here. Would I trade it? Yes, for sure I would, because the gap is still created there. It just instead of it pushing to the upside like this and taking time for it to come back here. So basically what I'm saying is this right here is if price pushed up right here and then immediately came back before without it moving higher and then coming back. If it pushed up right here, broke structure, then came back, would I trade it? Yes. If I get the rejection, I'm going long. Okay, as simple as that. Where am I taking the trade back to? Back up to this high right here. Okay, right here at 38 and a quarter or 39, 38 and 3/4 or 39 area right there. So, once price just creates that gap there, and I see it's aggressive, either selling or buying, then I'm going to go. Of course, I'm going to go. What am I trying to say? Long here, and then if I'm at supply, short. Okay, so the same thing. Again, there was once price made this run to the downside, tapped this area of demand, turned back around, it broke this small area structure right here. So, okay, broke structure right here, the downside. So there's supply sitting right here. Why? Breaker structure, supply being created right here. With this gap to the downside here. So aggressive selling right here is a breaker structure. Wait for price to come back to that area. Once price gets back to the area, look for a break of a candle, meaning a red candle takes out or breaks through a green candle to the downside. Take a shot going short. Now here's an example of what I'm trying to say. When you're trading for one time frame, one chart, say for instance, okay, and you're not moving in the direction of the higher time frame, you got to understand that the setups, the moves could be pretty short. So be looking for short-based trades, I'd say, to where you can get in and get out. It may not kick off a lot, but you're able to accumulate your ticks or points for the day fairly quick. Again, I do not recommend scaling down to too low of a time frame chart trying to do this, because as an example right here, price taps into this area of supply as it pulls back now. After the breaker structure, gap being created here, price pulls back to that area of supply. Once I see that, I look below me. I don't have too much room to trade to, because there's an area of resistance resting right below me. All right. So when I see price start breaking through this candle right here, the body of this candle to the downside, I'm already going short aggressively and looking forward. My entry is probably going to be around 43, around 43 and a quarter, 43 area. Looking and taking it back down to right here, 39 and a half at least. Okay. So you can pick yourself up there at least 3 points, 2.5, 3 points, pretty easy. So that's a quick way to be able to scout using one time frame chart, using one chart solely alone. Even if you're not moving or in confluence with the higher time frame, which I do recommend because you're going to be in a better position. It does give you double means of confirmation. But again, you can definitely trade from using one chart. Whether it's a 5-minute chart you use, for me it's a 12-minute chart, but you just have to look for those same type of setups that I showed you using the paired charts. The paired charts is just that you're getting more confirmation. It's the same thing. It's kind of like you're just using a higher time frame chart to look for a setup, basically a breaker structure in the market, price creating an area of supply demand, where price come back to it. Once price comes back to that supply demand zone, then you scale down to the lower time frame and look for the same exact thing that happened or take place as it did on the higher time frame. For me, the 12 range, for me, a 12 range chart, you could be pairing, like I said, a 5 and a 1 minute chart, as I stated that in my last video. Looking for the same setups. You're looking for a mirrored approach, a mirrored setup approach, on a strategy base for certain things that happen by step. Okay, breaker structure, supply demand. look for that gap, to be created, and then look for a pullback to the area and wait for the rejection on both charts. Okay, but that's all I have to show you today. And by example, I just wanted to go into a little bit more detail because I got a few comments about this. Could I please show how to actually trade from, or how I trade from the 12 range chart solely? Because most of you guys see me have my when I'm trading live, whatever the case is, and I do my recordings and post them on the channel. You see me primarily using my 12 range chart. Yeah, because I'm looking for quick entries in and out of the market, looking for quick setups. Again, now if I'm in confluence or in confirmation with the higher time frame, it just works out even better. But that's all I have for you to say, guys. That's all I have to say today. If you're interested in joining our Discord, we have a great community, over 700 members now strong, and you can find the link to that down in the description portion of the video. I will briefly show that real quick. Let me bring it over here from the other. Excuse me. Let me bring it here. My other monitor. Here's our Discord right here. It's just we have two trading channels pretty much. The general chat, the trading floor channel. General chat is if you want to discuss or talk about anything pertaining to the future markets, share information pertaining to the future markets. Once again, you can come over. If you got questions, you can use it as if like a question and answer type forum as well. Someone will have an answer. If it's not me, we have so many members here that have great information as well. And I may not know what it is you may be. I may not have to answer your question, so somebody else may have. Is what I'm trying to say. The trading floor is exactly what it is. When the market's actually open and we're trading during the day session, which we as traders, our future traders, we're sharing our levels, our zones of interest, our trade entries, things of that nature, and it does help people along. It really does, because it kind of helps them get a understanding of what's going on while the market is actually open, the session's open, and lots of people have, I guess I want to say, kind of learn in the same sense. It helps them understand the supply and demand zones for everyone who trades supply and demand, like on the channel. So again, I'm a supply and demand style trader. If you're interested in joining, please take the time, guys. Right now, please click on that subscribe button. Make sure to click on the bell. Turn your post notifications on so you never miss one of the uploads here on the channel as well. And if you're interested in joining the Discord, find the link to the Discord down in the description portion of the video. It is free of charge. Invite yourself in by clicking on the link. I'll see you guys. I'm wrapping this up in the next video. I have to get over into the Discord now and do some personal trading of my own. And take care, and I'll see you guys in the next one. Goodbye.